I do think when we get near 50 the next time, it will probably sell off, and everybody that's bearish, or maybe people that took a profit at 50 will say, that's it, can't get above 50. It's a triple top, forget it. And silver will rebase and come up and blast through 50 like a knife through hot butter, and then who knows where it's going to go. We have a natural corner on top of an investment demand that's insatiable. There is no limit to the amount of people that want money when their currency is failing. It's a panic buy. It's an absolute must. I have to have it. It's like everybody in Argentina going to get U.S. currency. It'll be everybody in the world leaving U.S. currency and trying to get into gold or silver.
Metals Focus expects the average silver price to increase by 6% year on year to $23.10 this year. Through November 7th, prices have grown by 8% year on year. Going forward, Metals Focus is firmly in the higher for longer camp regarding U.S. interest rate expectations. DavidMorgan is the publisher of the Morgan Report and a widely recognized analyst in the precious metals industry. David foresees a sell-off near the $50 mark for silver, but is confident it will surpass this level due to strong demand. Per our silver forecast and the historical gold-to-silver ratio, we expect the big silver run to start in 2023 and move to $50 in two phases. The quest to predict the timing of a price rally is a common pursuit among investors seeking to understand the silver market better. Morgan challenges the perception of silver, suggesting its current price may only partially reflect its actual value as fewer people are confident in silver future. Silver's supply and demand dynamics play a crucial role in determining its price. While silver production has seen an uptick in recent years, it has failed to keep pace with the rising demand, primarily driven by the industrial sector. He also highlights the potential for countries to back their currencies with gold, referencing historical contexts. Choosing gold specifically, and not any other commodity as a basis for the new currency system, is meant to leverage gold's characteristics to realize stability in the currency's value. When a currency is backed by gold, it is possible to convert into units of gold, as was the case in the Bretton Woods Agreement, when the dollar price was pegged at $35 per ounce of gold. Silver has a historical track record of maintaining its worth when other assets, such as stocks and bonds, may be underperforming. Now, we present the clips of DavidMorgan's insights from his recent interview with Mario Ineco. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think there's a strong case to be made what he wrote, that, the more and more that these other countries accumulate gold, they have the ability to back their currency by gold if they choose to do so. I won't touch on the silver thing right now, but one thing I thought of when you invited me was going back to, my history, not necessarily the gold history, but my lifetime. So gold peaked in January 21st, 1980. It was about 850 on the spot market. But if you took M1 and divided it by the amount of gold that the U.S. had at the time, a full 100% gold cover ratio is $400 an ounce. So we could have, at that time, gone back on the gold standard. And yet it went to 850. It was intraday. It didn't stay at 850 very long, but that was double what was needed to go on a 100% gold-backed currency. And of course, it didn't happen. Volcker came in and, moved the interest rates sky high, and gold had its day and it started to sell off and basically went into a 20-year bear market, such as silver as well. So I want to get that out there that, what we're saying in this article is that if you don't necessarily have to have a complete, 100% coverage, but that is a gold coin standard. That's the most stable. Those are the ones that go 100 years and prices never change. And I'm exaggerating slightly, but it really maintains monetary stability. But you can have a partial cover, like 40% backing in gold and that type of thing. Regardless, coming back to silver, that's a very interesting question because basically the United States Constitution started us on a silver standard. And really, the world was on a silver standard for quite some time. And what I find absolutely fascinating, Mario, is that today, no one considers silver to be money except for a few of us, really. I mean, the Romance languages, the word silver and the word money are synonymous. I mean, you can't tell somebody in Mexico or Argentina that, silver isn't money. You would have to tell them.
Declining confidence in the current system, particularly in U.S. Treasury securities, prompts DavidMorgan to suggest gold as a backup system. Gold faces an interesting start to the week, with the US dollar falling to fresh 2-month lows ahead of a key US Treasury auction, the latter providing an obvious catalyst that could dictate whether we see a retest of resistance above $2,000. According to David, the gold-silver ratio maintained at 20:1 for nearly several years, underscoring that history indicates silver's primary value as money. The price of silver will likely increase moderately in the next few years. Silver prices are influenced by factors such as inflation, industrial demand, and the strength of the US dollar. Let's get back to the interview.
Yeah, I mean, I'd like to break it down in 3 words. You already said it, Mario. I mean, all fiat fails. And whether it goes to absolute zero, I don't think the dollar will go to absolute zero. But also what you read, I mean, my take right now is that, as I said earlier, I think that the bankers know they're in trouble. They know we're getting near the end. They're going to implement to the best ability a new system. The new system is likely to be a cashless system, and it's all digital, primarily based on China's methodology that's working well in China, central bank digital currency. However, as that article said you just read, in my view, very likely event that it will fail, then they've got to resort to gold. They've got to put confidence back in the system. The whole system is a con job. It's a confidence game, and confidence is being lost. I mean, the idea that the United States Treasury market, the debt market, a bill, a note, or a bond that was issued by the United States government being the safest investment is ludicrous. It's absolutely not. They can't pay these things back. And that's the problem. And it's been the problem for a very long time. Yet it seems as if let's say more of the establishment is waking up to that fact now than anybody that really knows how to do arithmetic would have known a long time ago. But these things usually, not only do they end badly, but they seem to, at least in the modern lexicon, to be in a situation they take longer than any of us would expect. I certainly never thought after the 2008 financial crisis, and even the mainstream calls it a crisis, that we would be able to go this much further, but here we are. And that is, if you look at a chart of silver-gold ratio, that from the 13th century to present day, silver-gold ratio, gold-silver ratio rather, was 20-1 or less for 4,900 years. It's only been in the last 120, 130 years where it's got above that. The reason it held that ratio was what I call the natural ratio. That means because they only served one purpose up until roughly 1900, and that was they both served as money. Gold served as money and silver served as money. Once silver started to become a technically advanced strategic metal for war and all things technological, electrical, electronic, that's when silver was really made a commodity only, and there was something that was created called the Silver Users Association, or as some of us call it, the Silver Abusers Association, which was really a cartel to make sure that the price of silver stayed low so that they could use it in industry and make a greater profit. So I'll leave it there. I'll give it back to you. But you asked me the question that get me started on silver's value as money. And the point is, silver's actually, history shows us, more valuable as money than it is anything else.
Considering the future of precious metals like silver and gold, the debate on currency systems and challenges to traditional financial confidence adds complexity. Precious metals have traditionally served as a haven for investors during economic uncertainty, and silver is no exception. In 2023, it continues to pique the interest of those assessing its investment potential. How do you envision the role of silver and gold in the evolving financial system? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.